Good evening, everyone. It's 10 o'clock in the evening, Sunday, May 20th, 2018. I'm going to do a quick webinar on trade of the US dollar. If you have any problem hearing me, if you could just put that into the message box, that would be great. Okay, so I'm going to show you two charts. There's three that we use in our trading. One I'm not going to be able to show you tonight, but what I am going to show you is a simple daily chart with 4 different moving averages on it. So it's got the 20 MA, the 50, the 100, and the 200. So the light blue, the purple, the blue, and then the pink. The pink is the 200. So when the dollar lost the 200, it dumped. And it dumped all the way into February of this year, and then it sat sideways. In that period of time, we went really silent. We didn't say a whole lot about, the continuation of King Dollar dumping. If you look at my social media feeds, you'll see we just sat quiet all the way through this because we weren't convinced, and I'll show you why here in a second. But the important thing on this chart is the 200 MA. So price lost the 200 MA, dumped, continued to dump. And then right before it got the 200 MA, I was putting out tweets and I was sending notices to our clients saying, this is approaching the 200 MA and I would expect to see some upside. In fact, we started alerting it down in here because the MACD, which is down here, turned. So when we trade the US dollar, the MACD is our simplest indicator and it's very reliable on the daily chart. Once it turns either way, get your positioning set to turn with it, and when it loses or gains the 200, those are important indicators. But more than that, there's a pivot right here. So this red line is a pivot that our technicians have calculated as an important baseline now for a bullish move, and it's 92.61. So once it gained the pivot, it retested and hit. That's where we started to scale in long. So there was a retracement, there was a test back to the pivot, and that's where our entry started. Now the trick is, how do you trade inside of the structure that it's in? So a second chart that we use is a broad structure chart. And for every one of the algorithms that we have and that we're building, we have broad structure charts. They're geometric charts. They look funky until you understand how they work. I'm going to give you a basic idea of how this one works, just so that you know the structure to watch for. But I'm not going to take you into the third chart, which is the actual algorithmic trading chart for the dollar, because we haven't released that yet to the public or our members, and over the next 30 days it's getting released. So I'll just show you really quick how these structural geometrics work. If you go to our website, you'll get a feel for what this work entails, but really all it is a series of calculations and symmetry that form geometric shapes. So in this case, so when the dollar ran up here, this would be in 2015 in January, and it got into this structure. It formed a simple geometric triangular shape. So this is the top of the triangle, this is the bottom of the triangle, and this is the right side of the triangle. So if you can visualize that, there's its structure. It moved into the next triangle, did exactly the same thing, got up to the top, moved through, and once it moved into the next triangle, it actually jumped up one stage and into this triangle. And if you study the chart, you'll see the geometric shapes are amazingly predictable. As soon as trade lost the bottom, so this white line here, as soon as trade lost the bottom, we went quiet. We didn't trade. We knew that that was, as far as we were concerned, structurally divergent. It got back up in here, and then we started to message our clients that we were watching it to see if it was going to develop properly in the structure. It didn't, it failed, and I was on social media a little bit explaining that. And then once it got in and under again, and it fell down into the structure here, outside of the structure actually. That's where we went completely quiet and we just said, look, we got to wait for this to play out because it wasn't continuing below this main pivot. This particular pivot on this structure is around 92.41. So all in here we were quiet, and then right here, right when it started to get back up into this structure, I started to message our clients and send out a little bit on social media saying, okay, it's time to pay attention. So here's, I will just blow this up a little bit. Here's the current structure. Now, you have to understand, we've had this in place for 16 months, something like that. So when the dollar spiked up into here and it was hitting this area, I sent out notices and I put some on social media and I said, hey, you know what, watch this trend line right here. If the dollar follows this trend line, so it came back, it retested its pivot and spiked back up to this trend line. If it follows that trend line and it does it for any amount of time, you know that you've got the dollar back in its trading structure that we've been following. Its main resistance then actually becomes right here. So this is at 97.78, and that date is July 10th. Is it possible? It's possible. Could it come right up into, a little later than that, later July, into August? Sure. This trend line right here, that trend line is really important. If you see oil get up through, each one of these is a resistance, by the way, and up into this area, and it comes off and it starts following down here, then you know the structure is back in play. So what does that mean for your trade right now? So our algorithms will trade inside of here. Well, here, I guess. So each line is support and resistance, right? Now you can ignore that red horizontal line, that's an alarm. That red horizontal line is an alarm. And this is where price is right now, 93.78. So if you can picture this, this is its structure right now. Why is that important? Because as this gets up to here, so this is 94.38 on the 28th of this month, so in 8 days, we'll be trimming our longs intensely in there, right? If it gets up and over, then we're going to follow the structure again. It gets up this diagonal line right here, gets up into there, we'll trim again. So we trim into each resistance that you see on the wide structural model. That's basically how it works. So your important number here is 94.40-ish on the 28th of this month. And if it starts to come off, you can expect it to go down this trend line and come off and have to make a decision in here somewhere. And it's either going to conclude up or it's going to dump here. So that's the basic structure. If it gets up and over that point, you can expect it to follow this. If it gets up over, same thing. And I know it sounds completely corny until you actually trade through this and you watch it happen through the process. And then your big resistance is going to be right here at 97, call it 80, around the 10th of July, starting in around the 10th of July. But if you look at the way it's concluded in past, so you see this is the top here of that structure. You go to the next one, this is the top of that structure. So the dates aren't exact. Because the peak, for example, the peak of this structure was November 13th, 2015. It didn't come off until December 1st, so 2 weeks later. So there was a variance there. Here it was almost exact. Here it was off a little bit. It had to hit this diagonal trend line. Here it was almost exact. Here it came off and it was dumping, and now it's coming back into the structure. So, and I know it's hard to see, but if you can visualize this, this is the next structure right here, the broad structure, that triangle right there. So that's where your peak is. Oh, I'm sorry, you know what? I misrepresented that. This is actually, you can ignore what I said. I'm sorry. Your main resistance is 100.76 on August 20th. You are going to run into resistance all the way through. I can't provide you a copy of this chart, but you can take a snapshot of this video. And 100.76 on about August 20th, that's an important one. Here's another important one, 98.74 on July 26th. And right now you're working in this structure here where 94.38 or so on May 28th. So I apologize, I should have looked at that before I started spouting out numbers, but this is your main broad structure right here. So each time we get up to one of these resistance lines, we trim and then we add over top, we trim, add over top as we're going through the structure. And if it does what it's done in past, you could basically say, this is what your trade's going to look like. So here's the triangle all the way through here. So what it's done in past is it's come up, it's followed this trend line all the way up, it comes off here, and then it works its way back down, and then somewhere around here it's going to make a decision up or it's going to dump. And we expect it to go up unless it unless the dollar is going to take a new trend and it's going to trend down for a longer period of time, but we don't expect that. We think this is divergent activity in here, and that was all geopolitical, and that this is your next structure. So we expect basically the dollar to trend in a bullish formation until it gets up in the $100. Yeah, well, 100 point. There is a horizontal resistance line there that kind of makes it funky, but it'd be about 100.50, and that's going to come in somewhere around mid-August, and then trend down from there, and then make a decision up or down somewhere around June of next year. So that's a big structure in there. So your peak of that structure is around 100.50, and that's it as far as your intraday. Real quick. So when I'm trading, I just bring it down to my hour. And on the intraday, every time I get up and over my 200, I go long, and as soon as it turns, here I'll bring it down on the 15. So I go to the personally, this is how I do it. I go to the 15. Once price is underneath my 20, 50, 100, and 200. So once it loses it, I'm trimming out, and then I scale in long again once it's over the 200 on the hour. And that's basically how I do it. That's my personal trading style. As far as the quadrants and our algorithmic trading model, I can't show you that, but it's going to be out within the next month. If you have any questions, email me at info. So it's info@compoundtrading.com, and my name's Curtis, and I'll answer any questions you have. Thanks for coming out.